Hey guys, I am here with the famous Carl Richards, who is, in my mind, one of the most important voices in all of finance. And I've called him Saint Carl before. Carl really has just blown me away over the years with his sketches, the way he thinks about investing, the way he thinks about life. And I'm so honored to be able to tell you that Carl has illustrated the new book that Brian Portnoy and I did together, which you can see here, How I Invest My Money. It's coming out November 13th. And Carl did a custom illustration for each chapter. And each chapter in the book is contributed by someone in the financial services industry, financial advisors, asset managers, etc. And what they're doing in their chapter is telling the story behind why they invest the way they do. So stick around. Carl's going to walk us through some of the illustrations that we've picked out, how he was inspired to create them, and what goes into that. And I think this is going to be a lot of fun.
Super kind introduction. Thank you.
Well, it's all true. How long do I know you? Is it 10 years?
I was thinking about that the other day. Like we were both still like, just trying to make some major decisions when we first met. You were, yeah, anyway, major decisions when we first met.
That's true. I think I was trying to decide if I was going to go out on a limb and start the firm with Barry and how it would work and who would do what.
Yeah.
And you've made some major life changes too. You've lived elsewhere outside of the United States for a long time now, and I think both of us have been figuring it out as we go. So I want to get into the drawings that you've done. Do you call them drawings or illustrations?
We call them sketches. I think illustrations implies a level of skill that I cannot claim to have. Okay, so we just call them sketches.
But let's not downplay them too much, because these sketches have appeared on the pages of the New York Times for how long now?
Weekly for 10 years.
That's unbelievable. In addition to written columns that accompany the sketches. So it's a lot of work. It's a big body of work that you've done. So anyway, this first one, this goes to our friend Morgan Housel's chapter. And what made you come up with this, and how do you think about independence versus everything else?
Yeah, so Morgan had a great story. So first of all, the book's amazing. It was really a pleasure to read because I got a chance. Obviously, I had to read the chapter in order to find an illustration. My goal with the sketches is for them to be, the good ones will be a shortcut and a souvenir. So a shortcut into the idea. Right. And then a souvenir of the experience you have. So really, I tried to say okay, well, what did Morgan say in here that if I were Morgan, what would be the one thing I'd want people to remember? That was my goal. I don't know if I nailed it each time, but Morgan's, he just told these great stories about independence being the most important thing. It wasn't about being rich. It wasn't about being famous. It wasn't about power for him. It was about independence.
He's got this recurring motif about knowing when enough is enough. And knowing when you're just chasing something because you think you're supposed to, not because you really want it. And so for him, the thing that he's always really wanted was independence. And it wasn't necessarily prestige or the biggest paycheck he could possibly find. So I think that's a really great way of thinking about it. I want to go into this Christine Benz inspired drawing that you've done. Mm-hmm. Christine Benz, first of all, just a absolutely legendary columnist at Morningstar. She does a lot more there, but when she writes something, pretty much every financial advisor who comes across it takes the time to read it. And her chapter is about how her and her husband just kept doing the same thing again and again over a period of decades, and what that's led to. So I love the way you've sketched that out.
Yeah, I was struck by the word mundane. I remember specifically, I was like, mundane, how great is that? It reminded me of Buffett saying, a hallmark of our investment strategy is benign neglect bordering on sloth. Right. I always remember that, seriously, but because everybody thinks it should be different. And I think that's kind of the point of Christine's point is look, I'm working at this place, and we talk about all these things, and we do all these cool things, and it's amazing. And yet the truth of the matter is, success is a result of doing mundane things automatically over a long period of time.
Right. So she's got so much of the way she puts money away and the way she invests automated. So she doesn't have to think about it all the time. And the reason that's so
Yeah.
important for her is that her career is involved in thinking about investments and
All the
mutual
time.
funds. And so being able to not have to do that for herself and have it on this kind of stair step automated pattern, I guess, has been helpful for her mentally. Let's look at this one for Brian Portnoy's chapter. So Brian is my co-author. I guess we're authors/editors. But Brian did a lot of the heavy lifting to bring in all these amazing contributed chapters and edit them and decide on the order they should go in the book. And he really spent the pandemic working so hard on this project. So his chapter starts in a little bit of a dark place, but it goes where it should. So Brian is a child of divorce. So is I. And
Me too.
yeah, and so he basically talks about how in his formative years, he saw money as a source of misery / a tool to control people. But then he flipped that and he kind of made it so that money was about funding his contentment and taking care of people that he cared about, like his sister and his mom, and obviously doing what he has to do as he raises his children. So this is a great sketch. It reminds me a little bit of like technical analysis almost. Because it's a trend and it's going in the right direction, but it's taking a strange path to get there.
Yeah, I was struck by a couple of things. I was struck by the term funded contentment. I thought was really cool. And then I was also struck by this idea that you really don't know what that, you think you know that it's that way. I think this is true for financial planning generally. Like it's that way, like you guess, I think I want to go that way.
Right.
And then it's this process of being a little less wrong each day. It's not about being right from the beginning. So Brian talked about that. Like, well, we do this thing and we realized we didn't love that. So we tried this thing. And I was struggling between that and taking care of the people you love, because there was two themes in his piece. I'd never heard the term funded contentment.
Yeah, I think he made he made it up, but it's like kind of his tagline at this point.
Of course he did.
It's great.
But yeah, what I was trying to capture here too was that don't be disappointed, sad, or upset if you don't know what that means.
Right.
Just keep moving in that direction, and it's okay if you bump up against these edges. It's not about knowing, it's about doing, right? It's not about being right today. It's about being less wrong tomorrow.
Do you think that people even know when they're contented for the most part, or they don't find out until later? They say, I was pretty happy back then. Because that's the way I am.
No, I agree. I think we all have a tendency to do that. They just hedonic treadmill and like, I need the new thing and the new thing and the new thing. And then I think Instagram life has made it harder. We don't really even know. We have so much mimetic desire. Like we don't even know how to desire. Like we learn how to desire from what we see other people desiring, right? So I think both Morgan and Brian, that showed up this idea of like, okay, just why don't you pay attention to what actually brings you enough happiness, contentment, and then notice what doesn't. Get a little bit more of the stuff that does and get a little bit less of the stuff that doesn't.
Right. So this is the one that you did for me, and I'm going to buy a giant version of it from you and frame it because I love it so much, because I think you really nailed what I was trying to say, and I didn't even know what I was trying to say as I was saying it. So in my chapter, I basically explained the why behind what I'm investing in, and I think it turns out my investments don't drive my life. My life drives my investments, and I think that's what it's supposed to be. And that wasn't by design. It just turned out that way. So I do a lot of things that I do because I enjoy them, and they don't necessarily make sense to other people, or, I don't adhere to any kind of religious philosophy. You have to be all active. You have to be all passive. Do ETFs, no do individual stocks. I'm doing all of it. Plus, I'm doing things that you would never read in a textbook on investing. Like when a friend of mine launches an ETF, I throw money into it the first day. I don't know why. I do it because it makes me feel good. It's not on a spreadsheet. So I think you really nailed, I think you really captured what I was trying to say. I'm not going to put you on the spot and say, what'd you think of my chapter or what'd you think of my investment rationale, but I really think you got it.
What this book is full of is very interesting surprises for me. And I
Okay.
think people will find that surprising about you, that because and same with Christine, right? Like the use of the word mundane when you're like in the middle of the circus, right?
Yeah.
Like you're in the middle of the fun house, and I thought it was really clarifying and heartening to realize, like, look, it's just a small piece of what I'm doing, right?
Yeah.
It's like where would you put the kids on there, right? Like they'd be the whole circle,
Yeah. Of course.
like, so. And sometimes it seems from the outside it's the most important thing any of us are. No. It's a job. It happens to also be something you love. So I thought that was really cool.
Yeah, I think also, and you can relate to this from when you were an advisor working with clients, you almost are making double the bet on your own advice when you're an advisor and you're investing your own money. So you're investing alongside your clients in many of the same investments or strategies, and it's almost like it's a doubling down, because if it doesn't work out for your clients and you're doing the same thing, it's not going to work out for you. But on the other side, if it does work out, it's win win win. It's like it's more than 1+1 = 2. To me, it feels like 1+1 = 5 when things are going in the right direction. So that's another
totally
aspect when you ask financial advisors how they invest their own money, which nobody ever really does, which is the premise behind why we did the book. I think you see a lot of that. Like, if my business doesn't work, then forget about the investments, so everything really has to work.
I think it'll be surprising to people that, you put that as a, like, it's a thing over here. It's not like,
Yeah.
I think that'll be surprising to people, which I thought was really cool. I mean, I of course knew that, but I
Right.
think it'll be surprising to other people.
Yeah, because it can't be the whole thing, right? We don't have that much time. All right, so I want to talk about, this one's awesome. The one that you did for Desarte, it's like these intersecting lines, and it's what he values, and then how he wants to spend his time. And his chapter is about the fact that time is his biggest asset. He's 29 years old. It's amazing how much this guy has figured out at such an early age. But I just thought that the way that you sketch this out is flawless. It's just so perfect.
Yeah, Descartes is amazing, and I thought this first. I'm just looking at the book here, I'm so.
You could cheat. You could have notes. I got my copy.
I was looking for the word, like, because he said, like, he has this first thing about, his being first generation and his parents and the housing, like the sense of community. But I think he even says, oh, if I value a particular thing, person, or place, I want to invest my money there. Right.
Yeah.
So that was the first place I was like, what I value, that's really cool. And then I realized, look, I want to spend my time and my money there, and I invest here. So that's where that came from. I thought Desarte's piece was awesome in here.
Yeah. So he's a first generation Liberian American, and his parents literally fled the country. I guess they were having a civil war. I should probably know more about that. But he was basically talking about the fact that his dad wasn't at his, sporting events, and he wants to build a career and a life for himself that allows him to be there when he gets married and has kids. And I think that's like what every financial advisor / parent should be striving to do as they build their practice. And I think that's how investors should be thinking about the trade-offs between making more money versus having more time. It's like the hardest thing. We all talk about it, but it's like the hardest thing to do, right?
For sure. Yeah, it was so good. That, and like the real estate place to make a sense of community, like the whole thing was great.
So Nina O'Neill's chapter, you did this great, I guess it's like it's a great segue. This idea of balancing what you want for the present and what you want for the future. And this is really tough too, because for your future, you want to have more assets there, which requires you to spend less now and save and invest today. But you also need to do a lot of consumption today, especially when you're raising a family, because you want them to have these memorable experiences, and you want them to have the things that maybe you never got to have. This is another one where there's probably no easy answers, right?
Yeah, for sure. I mean, and she, talking about like investing in their kids' education early in life versus waiting until they're retired, like all of those things. This to me is I've thought about this image for a very long time. It just this every decision we make with money is about trade-offs, and this is maybe one of the biggest trade-offs we make is future versus present. And
Yep.
it's really important to understand that some people have way overweighted the future.
Yeah.
Like we run, it's funny sometimes, like it sounds crazy to say, but there are some people who like, you're like, dude, put the golfing shoes on. Like, look, you're there, brother. Like, stop with you don't need to save anymore, you know? And I think, but even if it's not about money, we sort of think like, oh, I'll do that in the future. I'll be happy when and I thought Nina did a good job of presenting this idea of like, we want to enjoy some of it now.
Yeah. My partner, Chris, says that the biggest challenge with our clients is something that you would never expect. But the hardest thing that he has to do is convince people to spend money because, talking about people that are like, of the boomer generation, they're in their late 60s, 70s. And for decades, they've had it drilled into their head, save, save, save. So now they've arrived, they did it, right? And they feel guilty buying a car that they've always wanted or, whatever the thing is. So he has to convince people, you don't understand. You have a 99% probability to be able to fund everything that you told me you wanted to fund. Go buy the car. And he's running into that. People all over the country, it's the same thing.
Yeah, I'm increasingly becoming convinced that that's the secret. Like money is meant, I think we even have words that hint at this, like currency and cash flow. I think it's meant to be used, right? Like it's meant to be in flow. It's meant to be. And I think when we stop it up, we get too focused on building one more barn, we're missing the whole point.
And then and then that can paralyze you because you've done it for so long. Let's do this one. This is fun. So my friend Cheryl Penny has a great chapter in the book. He is what I would consider to be a consummate entrepreneur in our industry. He's the founder of Dynasty. Dynasty is just this enormous platform for independent advisors. And I think he's got 30 or 40 firms on that platform now. He came from tough beginnings. He was basically orphaned at a young age, and his grandfather raised him, and he moved around to friends' houses and stuff, and really didn't have a penny to his name. And he did all this, with the support of his community, but with really his own will to succeed. And of course, he has notably succeeded. What were you trying to show us here?
Yeah, sometimes people, like my brain works this way where I'll read, I think Desartes was similar to this one. I mean, Cheryl said this, right? We have 4 broad categories or pools of capital that we think about, right? And I was like, sometimes it's the obvious answer.
Right.
I will read things and see them visually. Like I remember reading something where somebody's like, the line between confidence and overconfidence is super thin. And I saw in my head, confidence, overconfidence with the line. Right. And so when I saw this one, I was like, oh, this is easy. This is one where I was like, I want to put this on his wall. You know what I mean? Like I hope I nailed the logo, the souvenir for that experience for him. That was one of the ones that stuck out.
Yeah, he probably pictures it exactly this way. He talks about these 4 categories.
He said it.
Yeah,
he said it.
It's awesome. Yeah. I love it. This one's really cool. Ted Seides, shout to Ted. He's the Capital Allocators podcast, and he talks about investing at an extremely high level with hedge fund managers and portfolio managers for pensions, etc. But his chapter is like very down to earth and very personal, which was the theme of the book. And I loved reading it, and I really appreciated his take. What brought you to this way to illustrate what he was saying?
Yeah, I mean, I think if I recall right, he talked about his childhood as sort of maybe different from ours, like the ones we've mainly been taught, right? If I remember right, he said, secure, stable, worry-free.
Stability is a big one that I think, like a big running theme throughout the book. A lot of people are in search of that, obviously.
Yeah, I think stability, Morgan called it independence. I think contentment here, those are the feelings I now describe as contentment, Ted said. And so my thought was this idea of the foundation, at least what it felt like to me Ted was pointing to, was the foundation of, I want to build my life on a foundation of stability and then contentment, and I'll put my life on top of that. That was sort of the goal.
I think that's really well stated. And having contentment being important, but it can't be the bedrock. There's got to, because you're not going to be content if you feel like the rug could be pulled out from under you at all times. And I think a lot of that drives me. I definitely have that personality, that kind of like undercurrent of anxiousness, and maybe it's a good thing, but like striving to build that stability, I think is really important.
Yeah, and let me just mention one thing that's interesting about that too is always like, how do you know when you get there? Like, and I don't think we have time to discuss that, but the idea of like, if you're psychotic with money, more money won't make you stable.
Right, because then you have more to lose.
Yeah, like, you won't. More money is not the problem. But the idea of building on stability, I think, is really, really, really cool. Ted, I enjoyed all of them, but Ted's was really good.
Yeah. So this is Blair Duquesne, and Blair works with me. She's a certified financial planner. She's also a chartered financial analyst. I've known Blair, probably close to 9 or 10 years also, and I know you've known her for a long time. And I just think she has a very matter-of-fact way of stating things that are obvious, but that aren't obvious to people until they hear it said. And she's really good at that. She writes a great blog. What drove this sketch in your mind?
Well, I think, obviously Blair is super experienced, super smart, and like has the technical chops to get a CFA and a CFP. Like, she knows what she's talking about. It's really interesting to me that so many of the times we run around spending all our time talking about returns.
Yes.
Right? Investment products and returns. And what essentially Blair is saying is, again, it should be obvious to all of us, but the entire financial pornography circus is built around the idea that we're going to run around talking about returns. I think of like arguing about whether we should take a plane, train, or an automobile on a trip, but we haven't decided where we're going yet. And Blair is saying, hey, before you argue about all that stuff, decide where you're going. Like, the base of this thing is your goals. Why are you doing this first? Then we'll build the portfolio. Then the products that generate the returns are the least important thing. Very important, but least important thing is how that struck me.
In that hierarchy, they're the least important thing, and they're the thing that can be decided last. You can't say, this is my portfolio, and then here are the things I hope it will achieve. It's got to be
my goals.
Yeah, here's what I want to achieve, and then working backward. Okay, what sort of portfolio gives me a chance to be able to do that, right? So, she operates her practice that way. Like, she would never talk to a client about a portfolio holding or a fund or a stock without understanding what the whole purpose is of that money.
This sounds so obvious to people like Blair and you. But it's so opposite of the way that we view the industry and particularly sort of the media that surrounds it. It feels like, of course you wouldn't talk about that unless you understood why. Like, I think the piece that I enjoyed and it just reminded me as reading Blair's piece was this idea that a portfolio is constructed for the purpose of helping you meet your goals.
Yeah.
I've made a habit, like a funny little habit, of asking people I meet, when it comes up what I do, I will say, why is your money invested the way it is?
Yeah.
And I never get the right answer. Like, you almost always get the answer like, well, I read about it in The Economist. That's the really smart people, right? Or I heard about it on the news, or my buddy told me. You never get the answer, which is Blair's answer. This portfolio gives me the greatest chance of meeting my goals.
Yeah, it's really amazing that is not more widely understood, but it isn't. It really isn't. Let's do Perth. So Perth is the best. Basically, she's got this take on the right way to invest overseas in countries that are democratic and have a good record on human rights. And so she wants to invest in emerging markets, but she doesn't want to put her money into companies that are based in countries where they don't value human rights or civil rights. And so she's found a way to quantify which countries are worthy of her dollars, and she's built it into a product. But she's very emotional about it, and I think you kind of capture that in your drawing. Like, for her, it's not just a job. She deeply, deeply believes in this stuff, and I think people like that resonate with me, and I think they resonate with you. So where'd you get this inspiration from?
Yeah, I love this idea of using. I always think about it, entrepreneurship, like my definition of it is like, I'm going to use the business as the vehicle to forcibly insert an opinion into the world. Like, you know, we've got all sorts of famous examples of that. And when I read Perth's thing, I was like, look, she's just not only is it her dollars, it's the business she's built, where she says, I have an opinion and I'm going to insert this into the world.
Insert it, right.
By not only my own dollars, but the business. And I think that's just awesome. I love entrepreneurs and investors that have an opinion.
So I met her 5 years ago. We had a 30-minute meeting and I'm just like, how can I help? Like, tell me what I can do to help you do what you're talking about doing, because I love it. You know what I mean?
Yeah.
And she's
like compelled to do it. It's not like, but the beginning of it was, I need to change this.
You know why that's so important? Because how do you start a business, especially an investing business, if you're not passionate about, like, because you're going to need that passion to keep you going through times when people aren't paying attention to you, or money's not flowing, or an investment thesis is going against you. You're going to need that thing to lean on and to get you through.
Exactly.
So,
exactly. I mean, we use those words like thesis and hypothesis and strong opinion, and that's, her chapter was reeking of that. So it was good.
Yeah. Let's do Michael Underhill. This reminds me of like one of your classic sketches. I think you love these Venn diagrams because they're such a great way to convey how sometimes two things overlap in just the right way that you can exploit an opportunity, or you can really make yourself happy. So what are we looking at here?
Yeah, I mean, one of the reasons I love these Venn diagrams is because the Venn diagram police write me so many emails about them, because they say they're not Venn diagrams. So that's part of I get these like 3-page emails. And so they're not actually Venn diagrams, they're circle sketches.
Okay. So why isn't this a Venn diagram? Because there's nothing written in the middle?
Well, no, because it's normally a population. I mean, I get these 3-page emails, honestly, explaining it, that you've got a population, 2 populations, and the overlap carries, I'm struggling to not use a political one, but Democrats and Prius drivers.
Okay.
Right.
Probably
the
one
overlap
circle.
of those. Yeah, it would be one circle. And then if you had maybe Republicans and Prius drivers, there would maybe be no overlap or something, you know, like that's supposed to be the idea. And here, I just love to use the Venn diagram as a tool. I think when you are buying something and the only sort of reason you're buying it is because you hope it will work.
Yeah.
The overlap of that represents to me, like, whatever those investments you did in that overlap, that's not an investment strategy. So that's my counter argument to the Venn diagram police. But I'm pretty sure Michael must have said something, and I'm looking for it, where he talked about this idea that, it's not just buying something and hoping that it works. It's deep research.
I think a lot of people start off as investors as buy and hope because they don't know enough to be able to say, I did a lot of research, or the research I did is even meaningful. So they're not there. So that it's really all they have. And then it's through a lot of experiments, some of them profitable, some of them money losing, that they realize, okay, this is how you actually research what you're buying. So I think this
turns out it's hard.
Exactly. All right, we got one more. This is cool. This is my friend Lizetta, and Lizetta has just founded her own advisory firm with a partner, Rianka, and I spoke to her last week. They're in the process of hiring more advisors to come work with them, and they've got this really cool firm that is premised on the idea that they're going to serve people who are not necessarily being paid a lot of attention to by the industry, and they're going to do it their way, and they're going to do it virtually. And 2050, like 30 years from now, that's like their eyes are on the prize. And the way they think they're going to do it is by being themselves and bringing in advisors who represent that brand. So I think you captured that really nicely in this sketch.
I love the idea of thinking about 2050. What did they even, like 2050 Trailblazers or something, right? They
named the firm that. It's 2050 Partners.
What did they name okay.
2050
I
Wealth.
They did a podcast early on about that or something. I just love the idea of something being so ingrained in your everyday conversation. It's a little bit like you hear about seventh generation.
Yeah.
Oh, the crazy. We were in Italy a while back, and I talked to a guy whose family creates balsamic vinegar that ages for 100 years.
Come on.
No, 100 years. We bought a little bottle. And I asked him, I'm like, wait. So you're right now putting stuff in a barrel that won't be open for 100 years. So you know for sure that you are not going to be around. You're 50. You're not going to be around. He's like, yeah, my grandpa and my grandpa and my grandpa, great grandpa did that.
Oh, could you imagine if one of them has a kid that's like, I'm not so into the balsamic vinegar.
yeah, whatever. That stuff in the basement. What's that in the basement? Oh,
I want to be a rapper, Dad. Oh, that's great.
But I love the idea that they've got it in the name, right? And I also really thought it was cool, the recognition and the opinion of human capital. How it's people. That's how we're going to get there.
Yeah, and they're gonna Lizetta and Rianka are gonna crush it. All right, so you guys got to go to behaviorgap.com to see more of Carl's work. He's drawing, he's writing, he's speaking. He's an international sensation. You've been all over the world, right?
Well, we lived in New Zealand for the last 3.5 years. Now we're in London, and it's been everywhere. It's been amazing.
Awesome. All right. Well, listen, I just want to say on behalf of Brian and myself and all of the authors of the book, we so much appreciate these sketches. They add so much flavor, and a lot of them are going to end up framed on people's walls, and people are going to cherish them forever. And I certainly love mine, and I love all your stuff. So everybody go to behaviorgap.com. Can they sign up for updates on what you're doing and what you're up to?
Yeah, the only thing you can do there is sign up for the weekly newsletter. So every week we send out an image with as few words as possible. So
it's a good start. Carl, you're the man. Thank you so much for doing this. And
Josh,
everybody,
thank you.
Everybody check out Behavior Gap and check out the book. It's coming out middle of November. You can buy it in the bookstore. You could buy it on Amazon. Wherever you want to buy it, but you'll have Carl's Carl's sketches, and all of these great chapters that we talked about today. Thanks again.